before digging a little deeper into this market that is slowly losing steam, let's look ahead to the earnings season. We were just talking about that. We are just one day away from the quarter end. Well, Stanley Crouch is Aegis Capital Chief Investment Officer and also Senior Managing Director. He joins us now. It's a pity that Herb isn't with us today, Stan, because he's been banging the table and saying that this is going to be one of the most important earnings seasons that he's seen in a long time. Do you agree with that?
Oh, sure. I mean, we need all the information we can get in this market. Look at all the event risks still out there. I think what's interesting is all these relationships are changing so dramatically. You know, gold's risk on, then it's risk off. It's just really hard to figure. I think we've seen some inkling, though, into some of the earnings. I think it's obvious that the consumer is definitely compromised and starting to slow. The B2B seems still pretty decent. So it's a question of, you know, what does that do? I look at this like a super tanker. You know, we're driving the super tanker, and all these momentums are difficult to not only navigate, but to make changes in direction and speed take, you know, lags.
You know, there seems to be a pretty built-in expectation, Stanley, that the E in the price-to-earnings ratio is going to come down, right? And so the big variable is how much, because if it only drops 5 to 10%, you could still make the case stocks are inexpensive historically. What is your expectation for earnings this quarter?
Well, I think you're going to see bifurcation. Some people are going to beat. Some people are going to disappoint. I think the components underneath and the forward guidance is really what's going to drive things. Because what's in is in. And we had such a huge change in early August with the debt crisis and then the rest of what happened in Europe.
So looking at the consensus estimates across the board and across all sectors as you see it right now, do you see that there's a big risk for disappointments to miss the street?
I think that if the market believes the consumer is really dead going forward and the driver has been the consumer, then we're going to have some problems. And how that knocks on to the emerging economies.
Is it possible that we could see this so-called monster correction that John Tobacco a second ago was talking about in October?
We can see anything. I really believe we can see a huge range.
So you think that is a possibility as well?
Oh, yes. We can see a huge range. Look, the earnings estimates for year end have all been starting to be ratcheted down. Maybe they're late to the table.
Yeah.
You don't know. I think we could be...
But then why, Stanley, no offense, but why would anybody invest then when you yourself are saying we could see anything? We have so little visibility that I don't have any idea what's going to happen tomorrow. Why would I buy an equity with that in mind?
That's an excellent point. Here's the reason. Because
get lucky every once in a while.
Well, no, it's not just luck. We believe instead of going for the outcome that's unknowable in terms of price appreciation, if you can build that consistent earnings and sharing the dividend cash flows and then compound those, if the market sells off and you're on a dividend stream, you're going to be buying cheaper shares. So, and compounding against where nominal rates are at the kinds of yields we're seeing on solid companies. It's about, for us, it's about sustainability going forward. That's the key.
Stanley, thank you very much.
You're welcome.
Good discussion.